Salute. What's going on, everybody? So it's time for that video that everybody's been asking for. So people have been asking me about the difference between Forex and futures and asking me particular questions. So I'm going to get into those questions in this video. Now, this is not going to be one end-all be-all video because there's a few different things to go over, and I'm not going to be able to go over it all in this one video. So I'm going to get into the things I was primarily asked and just give you my 2 cents on everything. Let's start with the chart data. So on the left, as you can see, just to make sure that we're clear, on the left, you have the Forex chart. This is TradingView MT5's platform. And on the right, we have futures. This is AMP Futures MT5 platform, okay? So those are the two brokers that we're using to go over this and to go over the differences and things you might see. So let's start with the first thing that people ask me about all the time. They ask me about the chart data. I get asked about that because I spoke about that before. So let's break down what the differences is and why you may or may not notice any differences right here. So the first difference between Forex and futures. On the Forex side, it's a simulated version of a live market, meaning that the broker that you're trading on in Forex, whether it be CFD or futures, the Forex brokers do emulate the live market. The futures broker gives you the live market, and everybody trades that one conditional market, meaning that if anything happens on the futures chart, it's happening for everybody no matter what broker you're on. If something happens in Forex on that chart, it can possibly be just the broker in particular because that broker is emulating the live market. Now, what is the difference between the emulation and the live market? The difference is when you trade on futures for the live market, you have to pay for a data package from your broker. Some brokers include this in the different ways that you may trade, different packages or things that you take. But for the most part, you just pay a fee every month. And that's that. On the Forex side, you don't pay a fee for that. However, whenever the broker has a price condition like spreads and things of that nature, they can be altered because that broker is in control of the price that you see on your chart at that time. Meaning, sometimes you'll notice that when you're taking signals, like this happened to me when I was learning to trade and I was in signals groups because I'm guilty of buying them damn stinking signals from people that were no good. So I was buying the signals and I would notice that the broker that I was on, I would get stopped out in certain trades. And people in the group would not. And I would say, hey, how come I'm stopped out and y'all are not? I used to think that this was bogus, even though the signal was just not good. Because you don't want to be in a signal and stopped out and some people aren't. The main difference in why that was happening is because of the spread of the broker. So what the broker would do is they would widen the spread. Meaning, if you were 3 pips from your TP, they can widen the spread so that you are now pushing into your stop loss 20 pips away from where you are at on the market, meaning they can just widen your stop loss and tap you out into stop loss. So when people say they don't stop hunt, on a live market they don't stop hunt, but on the broker they can definitely stop hunt you. So if a bunch of people are entering a trade at one position, the broker can widen the spread and they can knock you out. Now that's one way that it happens. Another way that it happens, which is even more heinous, and it does happen, is that sometimes the candle will have this wick on it that it will wick for a large amount of pips. The highest I've seen is a 70 pip wick on Hugo's way one time. Somebody was in a trade and it wicked out 70 pips and I was on KOT4. This is no promotion to brokers. This is just what's happening, right? And I actually was in the same trade and this never happened on my chart. So the person posted this picture in the group. And I remember I posted it here somewhere on YouTube or Instagram or something like that. I did post the actual event. And he's in the group now, actually, that guy. He's in the Discord group. But when it happened and it got posted, it was one of those things where it was the broker. So the broker did this thing where they moved the price and they had a different candle from every other broker and nobody understood, but everyone on this particular broker had this 70 pip wick that did not exist on any other platform. And that's a prime example of not having a live market, because if that happened, it happened to everybody when you trade futures. So that is when I say live data. Live data means that everybody is trading one market, meaning that there's no room for the broker to manipulate it. However, now Because of this, on the future side, when you enter a trade on the Forex side, you usually get your regular commission fee, and that's it. On the Forex side, there's a bunch of fees involved when you take the trade, like the price per the contract. That's why if you notice on the future side, it'll say micro contract, mini contract, you know what I'm saying? And based off the size of the contract, there's a fee for you taking the trade. There's a price for entering the trade, and there's a price for closing the trade, and there's a bunch of fees there. So that's one of the ways that they make their money versus the Forex broker, where they just when they need money, they just wick everybody out or they stop on it. And that's up to you whether you believe it or not. I'm just telling you what I saw, and I saw wicks and spreads that were, to me, it was them liquidating traders, okay, or knocking them out positions. It happened every Friday, primarily in Forex. I used to see it all the time on Friday. It will reverse, and at certain times, everyone knows this. They call it peak conditions. When it's peak market times, they widen the spreads even further, like 5 p.m. Eastern time. When the market opens, I've seen spreads like 20, 30 pips, depending on the broker. So that's why they say don't open a trade in the first opening hour of the market, because that's when you see the wide spreads. And this happens usually throughout the whole week, like every day, every day, Monday through Friday. At that same time, you'll get the largest spreads on a Forex broker, whereas on a futures broker, now you don't even get the spread, okay? So you can just enter. So that's one of the benefits. So we're looking at Euro USD, and as you can see, pretty much the chart looks the same. You know what I'm saying? If you look at both of them, you really don't see much differences. Like if we look around, it looks pretty much the same. You don't really see much of a difference here, so there's not much I could say as far as manipulation goes. And on TradingView, the broker looks the same. However, if I'm paying very good attention, I do see differences in the signal from the robot. Now, if you pay attention to the future side, it's way more stable, and if you pay attention to the left, you see there's a bunch of cells where we would have ended on Forex. However, on the right side, if you pay attention, there's none of those cells there. But we also see that the moving average is behaving different. Why is this? This is because
bullish breakout to the upside on dollar yen 1 minute chart.
And this is a bullish breakout to the upside, dollar yen. This is because that was the talking robots, by the way. By the way, I have to interrupt and tell y'all, the futures robots have been dropped on the website Trade Game Official, and they are on an introductory sell. The sell will not last long. It's a couple days, so I advise y'all go check it out before the sale ends, because once the sale ends, the price is going to go up. I'm giving y'all an introductory price. If you have some older robots, you may be able to even upgrade them for I think 1/3 of the price, and this is all introductory, so check it out. So anyway, back to this video. So if you pay attention, this is one of the things that you will notice when you look at the price. It will have slight differences to the point where it will cause different conditions in motion. Now, what I noticed on the right side with futures is price just moves way more steady for some odd reason, and you just don't get some of the things you would get on Forex side. Even though the price is looking very similar, there are definitely some differences here, so you got to look out for these things. I'm just unlocking the chart because I want to see when this drop happened right here, why does it look so different? You see, it looks very different here. This looks very different to me, but it's the same thing, but the moving averages is definitely different. So anyway, this is, I think I know why too. I think I know why this occurred, but it's okay. We'll get into that later. So let's stick to the video. So you have mini, micro, and standard, right? So you got the mini, micro, and standard lot, and then you have the mini and you have the standard contracts, right? So they pretty much have mini, micro, and then you have standard contracts, right? And when you look at futures, they do have actual currencies there. So some people don't know this, but they do have currencies. Euro USD is one of the contracts that I found. It's right here, sitting here. Now, this is something that's hard to find, but this is the benefit of using MetaTrader to still trade futures, because you still get that same feel of entering your Forex pairs, but now they're not as manipulated on the future side. You can just take the contract and trade it, as you can see. So right now I think I'm in a GJ trade. I'm trading I am trading, yeah, you see 100 pips. 10 pips, I mean. I am trading GJ, but I'm going to go back to Euro USD for the sake of the video. So, as you can see, the price is very similar. Sometimes you'll get these weird wicks, like I said, and when you get these weird wicks, those wicks will be the difference. But for the most part, price looks good on the future side and the Forex side, you know. But like I said, the barrier entry is different. So let's talk about it. For futures, you're going to need a little bit more money just to trade the way you would probably trade on Forex, because things are a little bit more expensive. You're trading per contract, so when you trade contracts, the price to enter your trade is very different. So you will need a certain amount of money just to trade particular instruments. What I've noticed a lot of people doing with the future side is they're just trading certain instruments there, and then when they want to trade certain things while they can in the US, they trade those on the Forex side. Now, a lot of people are paranoid and just going through, you know, a lot of fear and uncertainty, and I'm one of them. I'm not knocking it about Forex. So most people are just trying to stay all the way on the future side. Like I said, I'm kind of used to things being disrupted, so I'm trading both. I'm even trading options a little as well. But like I said, I just dabble in both. I'm not gonna run away from Forex just because this is happening. But it's up to you. It's really up to you. Like I said, for futures, it's more smooth, but it's just more expensive. It's really on how you want to play. You know, pay to play. If you're somebody that has a really good strategy and you know you're hitting it out the park, then yeah, futures is great. But if you know you're still in that learning phase, I kind of think Forex is better for you. So my opinion is, if you're an advanced trader, futures is perfect. It's fine. That's why you see a lot of people saying they love futures, because they came from Forex and they got bashed in by Forex and they learned. And, you know, we went through that hard knock life, and now we're on the future side and we're seeing how smooth and consistently the price moves, and we just rock with it. You know what I'm saying? And that's pretty much why you see so many people saying futures is better than Forex. Is because we started with Forex. I came from futures and went to Forex because Forex was easier. And I will tell you now, it's really not the case as far as easy, right? So let me explain my take on this. Futures is easier to me personally to trade, but it's more expensive. So if you have a little bit of money and you want to trade and you don't know how, futures is probably not for you. However, Forex probably is. That's like a better place to start to learn to trade, in my opinion. And once you get really good, or you get consistent, or you start noticing you know what you're doing really well, to the point where when you see something you say, hey, I knew that was going to go like that, I should have took that trade. Once you start hearing yourself saying stuff like that, I should have took that trade, I knew this was going to happen, this did exactly what I said, I marked on my chart, when I came back it was right where I said it would be, then you should probably check out futures. If you're still learning, like I said, it's going to be a lot more expensive to trade futures because of the data fees, the fees per trade, and the entrance fees into your trade contracts. Because like I said, on Forex you just click the button as long as money's in the account. With the high leverage, they're gonna give it to you. Now let's talk about leverage. Regulated Forex brokers, we all know, are using this leverage of, like, they're using this weird leverage. What do I want to say? They're using a 1 to 50. I started on the 1 to 50, so I can't bash 150. I'm glad I traded on the 150 leverage, because when all this stuff started happening with the brokers, I was still okay. I always had my ANDA account, my old ANDA account, which I recently lost, which they've been kicking me out lately. I don't know what the hell's going on with that, but I'm on my third account now. But I always traded with ANDA first. That was like the first broker that I really tried. My first broker was trading. I won't say TradingView, Traders Way, and then I went from Traders Way to Oanda, and then I went from Oanda to Hugo's Way. And Oanda I stayed with because they were regulated, so I knew, hey, I need to keep the regulated broker, just because one, I like the fact that you get a direct deposit, which futures is the same way. You get that direct deposit to your bank account. You don't have to go through getting the crypto and then getting the crypto. Because I had a fear of people. Robot talking. That's right. Never interrupt the robot when it's talking, baby. But anyway, I had this fear that people were gonna hack my crypto, because I was big into crypto investments at one point. I had way too much money in crypto to even be safe to even talk about it. So I don't even like giving out my wallet or anything, right? with that being said, yeah, I love the fact that you no longer have to do that. You could just ask for your withdrawal, in 2 to 3 days you'll have it. You know what I'm saying? And you know, that's nice to me. I love that. I love the fact that you could just go to your bank account and see that. It looks more professional when you have to do business. As far as the offshore brokers, I would recommend that if you still have access to them and you're learning, use them. You know, like I said, people say, hey, should I trust my money? Listen, let's be real. I'm going to get ghetto here for a second, because I like to keep it real with my viewers. If you got less than $1,000, man, you're risking it regardless. You shouldn't be really worried about where you're going to put it. Y'all guys be worried about this amount of money. I wouldn't worry about it. If you got $1,000 and you go to Forex, you'll get smoked. I mean, futures, they'll smoke your boots. You'll be out of there in like 2 trades, man. Easy. 2 micro trades, you'll be dusted out. So don't worry about the money as much unless you're dealing with a lot of money. And this is not financial advice, because anyone can get on YouTube and talk, and that sounds crazy to some people what I just said. But I'm just telling you, in my opinion, I don't think the broker's trying to run off with your band, okay? So I would learn more on the Forex side, and once I get once I get medium to advanced trading, I will go to futures and check it out and see if you like it. My personal take is it moves smoother. Even though the price looks the same on these 2 charts, I'm telling you, when you enter a trade on futures, it moves a lot smoother. It moves a lot smoother. So you set it, you watch to see if it's hitting your levels. You feel like you don't have to sit there sweating on the chart. Go get a little cup of coffee, go take a walk, come back, check your trade, you good. You know, on the Forex side, it could get crazy, especially when that news come out. It could get crazy, man. Somehow the price looks the same, but it could get crazy. You start seeing things moving and stuff. On the future side, when you enter the trade, you're in the trade. That's it. You either gonna stop loss or TP or close. You know, that's it. That's all that's gonna happen. On the Forex side, them spreads, it could get crazy. Them wicks that be coming out of nowhere sometimes, it could get crazy. So, prime example, what I'll show you about futures that's kind of different, I'll show it to you here. Where's the gold? We got gold over here. And if you pay attention to how gold looks on the right side of the screen, people, if you pay attention to how gold looks, right, you will notice that there's like a lot of spots inside of the price. You see what I'm saying? And it shouldn't look like this. It shouldn't look like this. It should not look this way. And let me see if I could show you my gold trade. I'm on gold on Forex, right? I'm gonna see if I could pull this up in real time for you. I'm gonna see if I could pull this up in real time for you. Okay, so yeah, I'm gonna pull this up in real time. I'm gonna see if I can get this to y'all, if it'll allow me. And yes, this is Glory FX, so please do not get on my case about this, okay? Okay. It did it on both. Wow, that's horrible. But if you look at this trade right here, right? If you pay attention, right? If you pay attention to the gold trade right there, it looks completely different. You know what I mean? Like, it looks different. Let me show y'all again. It looks very different here. Yeah, so I had to take a second to set this up because it was doing some weird toggling between all the trades that I have open. So I'm on the MT4 broker. Let me change that mode because I don't need to be trading like that. I don't want to be trading like that ever. Damn, there's a lot of levels on gold, man. Let me sorry, I'm fixing something in real time. I know y'all like, what is he doing? I'm fixing my my indicator because I need that to be working properly. There we go. It should not be trading that way. So anyway, I'm not scalping gold right now. I'm trying to swing it. So anyway, so if you pay attention to gold on the Forex side, you notice how when you look, you can look smoothly through the price, and you'll notice there's no gaps as far as like price closing and opening. Where on the future side, you clearly see that. You know what I'm saying? You see that there's price parts where it's blank, and this is because the market is opening and closing on the future side way more frequent than it would on the Forex side. The futures market is 30. Let me see. Let me look it up live in front of you. I think it's 30 billion. And I think the Forex side is 3 trillion. And that's the IML talk. So I'm not going to go too crazy talking about it. But, let's see. Forex versus futures, right? And I'm sure if I Google that, someone's gonna come up with their little man. I don't know. They be acting like people don't be looking this up. Futures is like so unpopular too. Okay, look, something came right up. I'm gonna look at it and see what it says. It says pretty much everything that I was saying, so I'm gonna read that. I want to look for something a little bit more interesting. Let's go to Baby Pips. Baby Pips will have some. Yeah, there we go. So, like I said, futures market is 30 billion per day, and the Forex market is 6.6 trillion per day. And if you don't think that's true, you could just look at the futures chart right here and see all these gaps and see where the market was closing. And that means that even though price is still moving through other markets, on the futures market, it's closed. So that would explain why the 6.6 trillion is there versus the 30 billion on the futures market. What does this mean for you? Why did I bring this up? I brought it up because when you're trading, this is the type of volume you're going to be trading with. So that's why the future side is moving a lot slower, because whatever's moving through the future side is moving with way less volume. We got 30 billion versus 6.6 trillion per day. So if you think about that, that just means that when you're trading on the futures broker, your volume is much smaller. So you're trading way slower than you would in Forex. Whereas 6.6 trillion is trading versus 30 billion. That's a completely humongous, monstrous difference. And also when it comes to your money, it's the complete opposite. Forex is a lot of money trading, so you can trade with very little liquidity. Whereas futures is a little bit of money trading, so you need a lot more liquidity. So keep that in mind when you're trading. And if there's some questions that I missed, which I'm pretty sure there was more stuff I meant to go over, I'm going to just keep updating and doing videos talking about Forex versus futures. So I might put a little part 1 on this because I know I didn't go over everything I meant to go over. And I want to give a little bit more of a better breakdown. For now, I'm just trying to give y'all something for y'all to work over from my take. Because y'all asked me, how much money should you come into Forex with? I'll tell you, start with a band. Right? If you don't have it, it's okay, but you should start with a band so you'll feel comfortable. Start with that band using out 0.1. If you just saw my shorts video, I posted, I made 2,000 in a day of 1 micro lot. Okay, just using that on multiple pairs. I was only risking $50. You know what I'm saying? 50, 60, $70. So when you take those losses learning of 1,000 and you're losing like 50, 60, it doesn't get that bad to you until you start realizing, hey, maybe I just don't know what I'm doing. By the time you figure it out, you'll be down to maybe $500, if that makes sense. You'll be okay. You know what I'm saying? You can always put the 500 back over time. No one's saying you gotta have 1,000 on standby. Times is rough. I'm just saying you could build up to that. In the meantime, like I said, trade that demo. Do what I did. Trade the demo and give yourself a tough rule. And once you pass that rule,
breakout to the upside on Lumi Swiss 1 minute chart.
Yeah, can't interrupt the robot. So anyway, the fact that you don't hear the robot talking that much right now too means that everything is trending. If it wasn't trending and we were ranging, the robot would be telling me that to let me know that price is going back and forth. I know y'all probably don't know what's going on when you hear a robot talking, but I'll explain that to y'all. That's why it's good to have a talking system like this. It's telling me without me having to sweat on the chart. If I keep hearing it talking, that means something is going on a lot. That means something's happening. So if it's not talking as much, that means I'm good with my trades and I'm trending, so I don't got to keep going to run and check my charts on the trades I'm in. I could just leave. I don't have to sweat. Anyway, back to this. So that is why you have to understand that it's really about you as a trader. Do you want to risk a lot? You know, they say there's no great reward without a great risk. So it's really up to you. Do you want to learn? Do you want to learn smooth and steady? Do you got the money to go to futures and kind of learn that way? I don't know. I don't think futures is for beginning traders at all. If you're a beginning trader, I think you should go to Forex, and then once you get your boots wet, get your feet wet, get your toes wet, however you want to put it, then you can slide over to futures. That's my personal take. It's a definite stepping stone to it, because the money, simply put. A lot of people I see, they're trading $100, $200 in their account. You're not doing that on futures, okay? And for those of y'all that are still running to these weird platforms to trade, hey man, I'm here for y'all. Well, I'm in the video here because it was long enough. This is my first installment on futures versus Forex. Let me know what you guys think in the comment section, and if you agree, let me know what you want to see me talk about in another video, because like I said, don't come here, yo, you didn't say this, you didn't say that. I already know that I'm going to have to make more videos like this. This is just to get it out here to y'all. And don't forget, go to TradeGameOfficial.com. Check out the MT5 robots that we released for futures. We have a lot of stuff. As you can see, these are these signals right here. You can look at them and see that, you know, we was going off. We were going off. Alright. So let me just put this back on. So it looks better. It be looking weird sometimes when it's not like that. This is how y'all know this is live, man. Ain't no one takes either, man. This is live. Doing this live in front of y'all, man. Unprofessional though. Yep, but yeah, that's my take on this, man. I'm just putting this here for y'all. I gotta do it like this so I can give y'all the you know, comparisons and stuff, so y'all can see this for yourselves in real time. But yeah, so on the left is the Forex, on the right is the futures. I'm gonna put it back on Euro USD, and I'm gonna close out the video like that. Let me
We have a bullish breakout to the upside on dollar yen 1 minute chart.
See, that means the dollar yen is playing right now, because it keeps saying different. You see, that's why it's good to have that dollar yen is playing right now. But anyway, let me go back to the euro on the future side, so that we could continue to look at the similarities. All right, and there you go. So you got your similarities right there, and it looks very similar, but it's not. Promise you, it's not, man. It moves very differently, and I just explained to y'all the volume in the market is why. So I'm in the video. I talked enough. It's your turn. Like, comment, subscribe, man. Share the video, man. I need to get to 2,000 subscribers. I'm almost there. Be nice to get to 20,000, get to 2 million, but we can start where we at. I'm thankful for that. If you watch the video to the end, salute to you. Peace, guys, and be safe. Oh, one last thing. To the people who come and leave comments, understand I've been here 4 years. I came after the pandemic, so I know I didn't blow up. I didn't buy a Lambo or none of that. I didn't rent a car. Please understand, before you come around asking certain questions, please just look around, follow me on Instagram, look around and look and see what you see before y'all assume anything, because some of y'all take things way out of context and take things a little too serious. And when you say certain things to people, understand you should not tell them how they should respond to what you said, especially if you're starting the conversation. But God bless everyone, and y'all be good. Peace.